Hey everybody, it's John King and it is Friday, February 17th, and thank you for tuning in to my weekly market update. A lot has been happening this week and really this month, and it has not been good news for mortgage rates. So I'm going to talk in a couple minutes about an option to do a lock and shop program, which may give you some flexibility if you're worried about interest rates continuing to move up. But let me tell you what happened. So first of all, 2 weeks ago, we had the jobs report. The jobs report showed a lot of jobs being created, which the recession expectations were kind of tempered. We're pulled back and saying, well, wait a second, how can we have a recession when we have so many jobs being created? And that is a real concern. Recessions lead to lower mortgage rates. If we don't have a recession, then the Fed is likely to continue raising their rates, and the Fed is likely to drive mortgage rates even higher. So that's the counterbalance we're looking at. I don't expect that to be the case. We have 1 month of data that shows, hey, we got a lot of jobs being created. We're going to know more in a couple of weeks when we get the jobs report that comes out the first Friday in March. But more importantly, or in addition to that, was the inflation report that came out just 3 days ago on Valentine's Day, the 14th. And that inflation report said that inflation was a little bit up, about the same, but a little bit up compared with last month. And we were expecting inflation to drop a little bit further. We've seen inflation drop in the report in November, December, and January, but February's report wasn't a drop. And the markets freaked out. Combined with the jobs report, the inflation report said, you know, these are the two things that we're paying the most attention to, jobs and inflation. And in February, both of those reports are pointing towards maybe we're not seeing the recession heading into, or the economy heading into a recession, and maybe we're not going to see lower interest rates as quickly as we thought. I don't think that's the case, but only time will tell. Last night, I did a masterclass on how to buy a home, talked about a lot of amazing things, so make sure you check that out. It's 90 minutes long, but it's really, really good information. Everything somebody needs to know from start to finish on how to buy a home and how to do it successfully. A lot of really good tips and tricks in there. I also am doing a video today on strategies for negotiation. So that's really, really good stuff to help you, whether you're negotiating for a job or whether you're negotiating for a home. A lot of the strategies I talk about are really good. So make sure you tune into that video, and that'll be linked as well in the comments below. Finally, I want to talk about our lock and shop program. Our lock and shop program gives you the ability to lock in an interest rate now and then take 60 to 90 days to close with that interest rate, or better if the market gets better. So if you're worried about rates going up, we've seen them go up in the first couple of weeks of February, and you'd say, man, I wish I had locked 2 weeks ago. So do I. Maybe in 2 weeks, you're going to say the same thing, man, I wish I had locked 2 weeks ago. We can lock you in now, but you get the benefit if rates are lower at the time that you get in contract for a home. We give you a super simple explanation of how it works. You're going to pay a fee. It is non-refundable. It is applied to your normal loan fees. So it's not an extra cost, but it's money you lose if you do not complete a purchase within 60 or 90 days of locking the loan. So your fee is 0.25% of your loan amount. So if you're shopping for $500,000 homes and you're planning on putting $100,000 down, your loan amount's $400,000. Your fee is going to be $1,000. Again, that's applied towards the normal fees, but now you're locking either for 60 days at today's market rate or 90 days at today's rate plus 0.1%. An eighth is 0.125. So if today's rate is 6.5, you can lock for 60 days right now. And if you close within 60 days, you get that 6.5% interest rate. If it goes lower, I'll explain in a second what happens. If you want extra time, if you want 90 days to have confidence that you can buy, then you can lock that rate for 90 days. But if today's rate's 6.5, then we're going to lock you in at 6.625. Now, the best part of this is if interest rates fall, we give you the lower interest rate at the time you go into contract, as long as it's within, as long as the contract is less than 30 days. Because when we drop the interest rate, we're dropping it for no longer than a 30-day time frame. So really, really good option to help you get a rate now with the benefit of if rates drop while you're shopping, you get to have that lower rate. If rates stay the same or go higher, you get the benefit of locking in today's rate, but you are risking 0.25% in fee that you're paying me in advance, that if we don't close escrow on this within that time frame, then you lose that 0.25% in fee. Hope that helps. If you have any questions, give me a call. I'm looking forward to taking great care of you, and enjoy your day. Bye-bye.